Chapter 11, the role of banker in marine insurance. Of course, it is a very important role. And whenever you are combating with any maritime fraud, the different agencies involved, their role to play, and how the the person with fraudulent intention can, find out the faults in the system and, mold it for their benefits. This is very, very important, and that is the reason a marine underwriter also should know the totally banking methods and banking process. In this chapter, we will learn about the various methods of payment in international trade, along with their advantages and, of course, disadvantages. This is also discussing about the USP 600, a set of rules on the insurance and use of letters of credit developed by ICC, that is International Chamber of Commerce. This is very important. There are many system of payment is such that you have to submit documents to the bankers. For example, as per the LC, say bills of lading, the invoice, the proof of loading, and sort of things. You have to submit to the bankers. At the moment they get the documents, you see, bill of uh, lading, it is a proof that the cargo is loaded. It is a receipt to the given to the shipping company, has given receipt to shipper that he has received the cargo. So after loading, the titles of goods are changed to the consignee. In that process, having these documents, there was a system of payment. The bank will accept the document, check the document, and release the payment to the consignor. But then it can so happen that an unscrupulous vessel owner and the consignor put together hands to hand, they may play a mischief. What is that? In a old rust basket, which may be going for a funeral voyage, or which may be whatever is the intention, but then the vessel owner gives a bill of lading to the consignor, and then he sails out. Now his intention is not to reach final destination, but then theoretically his vessel is full of cargo from the point of loading to the point of destination, and then his intention is never to reach there, so he scuttles his vessel. Scuttling means he is making deliberate hole in his vessel, and the vessel is sinking. After that, he prefers a claim with the hull and machinery underwriters, and the cargo interest is also claiming from the cargo interest has already received money, because the understanding with the banks was such that the moment he submits the documents, etc., his uh, their payment will be released, and then the vessel never reaches. So it is a totally loss. It is a banking fraud, and then the consignee is also in the process. Then the claim will be preferred with the insurance company. The insurance company can investigate through ICC IMB, and then if you notice that the actual cargo was not carted, it was never loaded, and all these things, if it is proved, then they will say it is a misconduct on part of assured prior to attachment of the risk, and hence claim is not payable, or the vessel, it will be investigated to ICC IMB, and there is every possibility. So who is suffering? Basically, is the consignee doesn't get a claim. Their banker will honor the payment, and then it is lost to consignee. End of day. So who is unscrupulous? Unscrupulous is the consignor, ship owner. So such frauds, documentary frauds, are possible. I have seen a consignment where 5,000 bags of rice, they were uh, they were short landed by the vessel in Russia. The Russian port has issued a short landing certificate, and the claim was lodged with the insurance company in India. I was asked to carry out investigation. In the process of investigation, I contacted the seller, and the seller has confessed that, look, our intention is not to see what has happened. We could manage for getting a advance bills of lading. Getting advance bills of lading, it is considered as a fraud. Insurance company is not accepting this. Nowadays, we are asking for a stamp on the bill of lading shipped on board. But earlier, they used to give, before arrival of the vessel, the bills of ladings were issued to uh, the shipper or the exporter. So based on this bill of lading, quality certificate, etc., he used to negotiate his documents in the bank, and his payment was released even before the departure of the vessel. So that was the firstly. Of course, apparently the exporter was to a big party. Intention was not to cheat uh, anybody. The intention was not to take false claim from the insurance company to a big company. This company, a very famous film actor, friend of ex-prime minister, and the intention was, of course, not to make any fraud insurance claim. What happened? He used to get, because of his name, etc., in the market. Even Russians accepted that it is no issue. You can get the advance bills of lading, get your money released before shipment, etc. That's all. His intention was that he should get his money faster. In one particular case, he got a bill of lading of say 1 lakh bags, and 5,000 bags it did not come to port because of some problem in Gujarat roads. Either it was heavy rains or some breakdown, but 5,000, approximately 10 trucks, they never reached. But what happened? The vessel came, took 95,000 bags of cargo, and they left. So 5,000 bags, they were not, they were carted subsequently. But then, having issued the bill of lading in advance, there was nothing they could do anything. And then there was a short landing and there was a claim, etc. But then the sailor said, don't worry, I'll make it good. I will say that there was some error in counting, and then he will compensate the loss. You don't worry. So that was the. So documentary frauds are possible, and documents are very important in this particular trade. In international trade, there are various methods used for payment of goods and services. So first is consignment purchase, the cash in advance, down payment, open account, okay, uh, open account, documentary collection, letter of credit. So there are various methods of payment which is adopted in between consignee, consigner, and bankers of both consignee and consigner. So you should know there are different methods of payment. You must know as an underwriter, as a marine person. See, basically, this is most beneficial method to the consignees. So whenever I am purchasing, or whenever the exporter is sending consignment to me in India, I will pay only once this consignment is sold in India. So whatever is my profit, I will retain with me, and whatever is the balance amount as per the, it is of course invoice amount, etc., I will pay it back to the consigner or the shipper. So importer makes payment only once goods or imported items are sold to the end users. It may take 1 month, it may take 2 months. It depends upon the requirement of that consignment and commodity in that particular market. It could be fast moving items also, it could be slow moving items also. But then this is very, it is more risky and time consuming. Uh, the consigner and consignee should have excellent relations, or maybe both are same company, then things are okay. A sister company, same company, globally companies knowing each other for years together, and there is no chance of fraud, then things are all right, it can be acceptable. But if it is a new one, the first, so for example, certain items are damaged, certain items are not sold, certain items are rejected and returned back. So then the problem starts coming when these atoms are there. So that is the reason this is considered most risky uh, and time consuming for methods of payment of export. But it is something like this, if both the companies are of one ownership only, under one ownership only, then this type of arrangement is possible. It's not difficult. Because if it is uh, of course, nowadays terms of sales are different. There is a duty paid, etc. There are various terms of sale. But then considering this consignment purchase, the consignee should sell the items, and then whatever he gets after selling, he will give it back to consignor. Cash in advance. No banks are involved in this transaction. It is directly consignor and consignee. But this is very risky because you see, I am asking whatever you are going to supply me, you should give me in advance, and I will pay you and advance, and then I will supply the material. Now, this type of transactions are possible only when you have a very good faith in each other. Many times, what happens? It is the seller's market. Seller's market means seller is not bothered whether somebody is purchasing or not. There is a lot of demand for that particular item, and then this being a seller's market, the sellers are dictating the terms. So anybody, any consignee who wants to purchase that, or the buyer who wants to purchase this, the seller will say that, look, you want it, you pay me in advance and I will supply it to you. But then why it is risky? Uh, because if he doesn't supply, or if he is bankrupt, or something goes wrong in the full process, then naturally a lot of funds are at stake. I have seen many Chinese consignment. The party with the documents has paid to the Chinese supplier. By the time the consignment in container came to India, we found all spurious material. There was no particular cargo or that metallic atom which were intended. It was not there. So, having paid in advance without any inspection and such things it is of course quite a dangerous method of payment. But then it is inexpensive. Inexpensive means there are no banking charges, and there is direct contact between importer and exporter. So there is a contact without any commercial banking involvement. So again, when it is possible that you have a lot of faith in each other, and then we know each other for a longer period, and also you are prepared to take some calculated risk in the full process. In that method of this transaction, the cash is taken in advance before any type of exports. So this is in a way like cash in advance, but it is not the full amount which is paid to the from buyer to the seller in advance, but it is a some part payment, what we call down payment. Maybe 15%, 10%, etc. You will find many project cargoes or such cargoes, which is very, very expensive. The seller will take some 15-20% in advance, uh, and then he will start the process of the shipment or process of manufacturing, whatever it is. So it is importer pays only fraction of amount as advance payment. The advantage is seller starts performance the moment he gets part of the payment. But then the disadvantage is that there is every possibility the seller may not fulfill the commitment agreed. So this is in between, again, the giant companies knowing each other, and they know that these companies are not going to. Say, for example, if I am having a commitment with company like Tata's in India or anywhere in abroad, I am sure that Tata's are not going to cheat me. Similarly, there are very big organizations with the name, repute, brand, etc. And then they are not going to cheat. So and also it is a seller's market. So they say, look, if you want a consignment from us, you will have to give certain part in advance. It is a down payment you have to make, and people are giving that down payment against the uh, uh, acceptance of your order. This open account system, this involves the very less restrictions and the lowest cost for the buyer, definitely. This is also presenting the seller with the highest degree of payment risk, and it is employed only between the buyer and seller who have long-term relationship involving great level of mutual trust. So this is the importer takes delivery of the goods and ensures that supplier is paid on a prefixed date on a particular time. Now this is the basically this type of payment is mostly seller and buyer know each other and have strong credit history. Of course, there is no protection to seller in this case of in case of non-payment, and importer he need not to issue any negotiable instruments or something like this. When I get the consignment on a fixed date after say 15 days, 20 days, 30 days, 40 days, the buyer will make the payment. There are of course the problems, disadvantages, but then this is done when both are knowing each other. You see, anything which is a cash transaction, when you have nobody should do cash transaction when the first time, then the chances of fraud is much more. Find out about the seller, find out about the buyer when you are entering into first time transactions. This is in a way a safe transaction. Of course, you don't require any letter of credit, etc. It is a export operations within low cost, but it does not provide some lend of protection, as the letter of credit it does not involve any kind of bank guarantee like letter of credit. So payment is settled through bank with exchange of documents. That means the exporter's bank will send documents to importer's bank, and then the payment will be effected. Seller instructs his bank to forward documents related to export to buyer's bank. There are two types of documentary payment, DP documents against the payment, documents against acceptance, and documents against payment. These are the most popular methods. Basically, documents against payment, that is known as a DP, where documents, when it is submitted to the buyer's bank, the buyer's banks make the payment. It is very simple and most safe method on part of seller. The documents on acceptance, it is the buyer will give a guarantee or he will sign the draft with the bank that after 30, 60, 90, whatever is the prescribed days accepted. So after that, he will be effecting payment through bank. So these are two systems. Then there is a payment notes. If the buyer draws the documents again acceptance of a bill of exchange, the collecting bank sends the acceptance back to remitting bank or retains it for fiduciary basis up to maturity. On maturity, collecting bank collects the bill and transfers the proceeds to the remitting bank for the crediting to the seller. So these are about the payment notes. Now in this there is no LC is open. You see, letter of credit. This is the acceptable methods. It is buyer and seller negotiate purchase and sale of the goods. The seller demands cash or buyer's bankers letter of credit as guarantee for payment before they undertake shipment. So that means it is the guarantee given by the bankers that they will be paying after say prescribed date or prescribed condition. For example, either documents are supplied or there is a on site of cargo, whatever is the terms agreed. But then this guarantees that there will not be any. See, even if there is a fraud or damages, etc., the remittance will have to be made by the buyer's bankers. So this is a signed document which is forming part, or it is embodying an undertaking by the banker of the buyer to pay his seller certain sum of money on presentation of documents evidencing shipment of specified goods and subject to compliance with the terms are specified and terms condition as per letter of credit. Now this is a flow chart of credit, letter of credit. A letter of credit issuance and advising and confirmation, etc. So what is the step one? So LC beneficiary is the seller and LC applicant is the buyer. So that is the foremost step. Then what is step two? The buyer is informing to the issuing bank. Then what is the step three? It is advising, confirming bank. And then the uh, the uh, the step four, the confirming bank will inform beneficiary that this LC has been signed or it is issued. So the step one is buyer and seller conclude the sale contract and agreed to use letter of credit as the method of payment. So this is in between buyer and seller. Now buyer is approaching the issuing bank to issue a letter of credit on his behalf in favor of the seller with all terms and conditions which is specified in the letter of credit. The issuing bank will issue a letter of credit and request the advising bank to advise or confirm the credit to the LC beneficiary, that is seller. So then advising confirming bank authenticates the letter of credit and sends the LC to the LC beneficiary. So these are the foremost steps what we are trying to see in the chart. This is a complete flow diagram which is indicating how the LCs are going from the bank of buyer, issuing bank to the beneficiary bank, reimbursing bank, negotiating bank, to applicant to beneficiary. So this is a flow chart which is indicating different steps which can be explained in the next slide in a simple way. So the step 5, seller prepares and dispatches the goods to the buyer's country. That means he is exporting, he is completing the port formalities, clearing forwarding formalities, carting formalities, and he is forwarding the goods to uh, the exporters, the buyer's country. Now the seller presents the draft and the documents to the nominated bank. So what are the documents requested? Quality certificate, quantity certificate, alleged survey report, whatever is specified, the packaging details, survey certificate, everything, whatever is the documents listed in LC, they are presented to the uh, to the nominated banks. Now the seventh step is nominated as negotiating bank. The bank checks the documents presented against the letter of credit terms and conditions and seeks instruction from the seller on documentary discrepancies. Any mistake in bills of lading, documents can be dishonored. So all these things are checked very properly by the nominated or negotiating banks. Step 8A is nominated bank will forward the draft and or documents to the issuing bank. All the documents are now checked proper, it is in order. It will go uh, to the issuing bank. The documents are free from discrepancies or discrepancies are supported by seller's indemnity. Nominated bank claims reimbursement from the appointed reimbursing bank. The reimbursing bank pays the nominated bank against a valid reimbursement authority received from the issuing bank and statement from negotiating bank that the documents complied with letter of credit terms provided in the letter of credit. The step 9 is nominated bank will now credit the net proceeds into the seller's account. The issuing bank checks the documentary presented against the LC terms and conditions. If documents are free from discrepancy, issuing bank reimburses the reimbursing bank. The issuing bank, now step 11 is the issuing bank presents documents to the buyer for the purpose of payment. Step 12 is once the payment is received from the buyer, issuing bank releases documents to the buyer for the letter of for later to collect the goods. The fraud can be that unscrupulous person. I have seen recently, it was the Oman Insurance Company. The bills of lading and the documents were released to some third person only, and then he cleared the consignment, and the actual who was having the bill of lading, etc., who has paid the money, he could not get the document. So he has lodged a police complaint as a fraud against the shipping company. The UCP 600 is prepared by International Chamber of Commerce, ICC, Commission on Banking Technique and Practice. This is full name in 2007 revision of Uniform Customs and Practice for Documentary Credits, UCP 600. And ICC publication number is ICC, the International Chamber of Commerce, publication number 600. The ICC, the ICC Commission on Banking Technique and Practice approved USP 600 on 25th October 2006. The rules have been effective since 1st July 2007. So UCP 600 are the latest revision of Uniform Custom and Practice that govern the operation of letter of credit. UCP 600 comes into the effect on 1st July 2007. The 39 articles of UCP 600 are comprehensive and practical working aid to bankers, lawyers, importers, exporters, transport executives, educators, and everyone involved in letter of credit transactions worldwide. This is very, very important even from the insurance point of it, because you should know that the Article 228 of UCP 600, it is insurance documents and coverage. This is an insurance document such as an insurance policy, an insurance certificate, or a declaration under an open cover must appear in the issued and signed by the insurance company, an underwriter, or their agents or their proxies. Any signature by an agent or proxy must indicate whether the agent or proxy has signed or on behalf of the insurance company or underwriter. You see, they are trying to seek the guarantee through insurance company in a way. When the insurance documents indicates that it has been issued in more than one original, all originals, this must be presented. The cover notes are not accepted. Try to understand. Cover notes which are not stamped documents, they are not accepted. An insurance policy is acceptable in lieu of any insurance certificate or a declaration under the open cover. The date of insurance document must be no later than the date of shipment. That means it should be in advance, not that I have already bills of lading and afterwards somebody is issuing a policy. Unless it appears for the insurance document that the cover is effective from the date of the latter than the date of shipment. That means maybe I have issued document little late, but the policy validity starts from the earlier date, that is the date of shipment. So this is very important on the insurance coverage. So the insurance document must indicate the amount of insurance coverage and be in the same currency as the credit has been given. A requirement in the credit for insurance coverage to be for a percentage of the value of the goods of the invoice value or similar is deemed to be the minimum amount of coverage required. If there is no indication in the credit of the insurance coverage required, the amount of insurance coverage must be at least 110% of the CIF or CIP value of the goods. When CIF or CIP value cannot be determined from the documents, the amount of insurance coverage must be calculated on the basis of amount for which honor or negotiation is requested for the gross value of the goods as shown on the invoice, whichever is greater. The insurance document must indicate that risks are covered at least between the place of taking in charge of shipment and the place of discharge or final destination as stated in the letter of credit. The credit should state that the type of insurance required and if any the additional risk to be covered, an insurance document will be accepted without regard to any risk that are not covered if the credit uses imprecise terms such as usual risk or customary risk. When the credit requires insurance against all risk and the insurance document is presented containing any all risk notation or clause, whether or not bearing the headings all risk, the insurance documents will be accepted without regard to any risk stated to be excluded. An insurance document may contain the reference to any exclusion clause. An insurance document may indicate that the cover is subject to a franchise or excess deductible. Of course, there are not much restriction placed on the issuing how certificate to be issued, but there has to be insurance. Many times in the LC, etc., they will say we want all risk policy. So, considering this requirement of LC, then there will not be trade clauses attached to it. So, when the two consignee consigner understands that trade clauses are much better than any other all risk clauses, they should be informing bankers and it should be forming part of their letter of credit to indicate that what is the adequate coverage is required. But this is about the what you call about the UCP 600. This is very important from the point of insurance. You can combat fraud if you know the banking procedures to avoid any documentary frauds or to assess documentary fraud or to find out exactly where something has gone wrong. So this is very important in the consignment method of payment. The importer makes the payment only once the goods are imported. Items are sold to the end user. Cash in advance is a prepayment method in which importer makes the payment for the items to be imported in advance prior to shipment. In case of open document, on in down payment, the partially payment is made. In case of open account, an importer takes the delivery of goods and ensures that the supplier to take the payment at some specific date in the future. Documentary collection is the important bank payments methods under which the sales transactions are settled in the bank through exchange of documents. A documentary credit is signed instrument embodying an undertaking by the banker of the buyer to pay the seller a certain sum of money on the presentation of documents, evidencing shipment of specified goods and subject to compliance with the stipulated terms and conditions. The uniform custom and practice for the documentary credits, which is also known as the UCPDC, is a set of rules of the issuing of the use of letter of credit. The International Chamber of Commerce has developed and molded the UCP by regular revisions, the current version being the UCP 600. This is end of our chapter 11. Thank you.